7 construction contract. They are saying that till the contract is executed up to 25%, no need to recognize the income. Guidance note of the institute: 25% of the project, construction project, 25% of the booking by registered agreement, and at least 10% of the advance is received. Then only you can recognize the income, otherwise you cannot recognize the income, as per the guidance note 2012 real estate transaction. But here, early stage cannot extend beyond 25% of the stage of completion. So they don't want to use the exact words of PS7, but yes, if you continue to not recognize the income of the contract till the contract is executed to 25%, then that will not be a problem. You can extend, but not beyond 25%. Now let us try to understand ICS 3 with this example. In fact, the red one we already discussed. After reducing 10% retention money, 10 lakh rupees, this example we have been discussing, that the revenue will have to be considered at 1 crore rupees and not 90 lakh rupees, because the retention money as per this ICDS 3 is going to be part of the turnover. So it will not be 90 lakh in your case, it will be going to be 1 crore rupees. The green figure, sale of MT, is 50,000 rupees. You cannot reduce it from the purchase authority, you cannot reduce it from the WIP. It has to be offered as an income in the profit and loss account credit side below gross profit, sale of MT. And the blue one, interest on loan taken for contract execution. Interest on loan taken for the borrowing cost, Bombay High Court in Lokhandwala complex, it said that borrowing cost even for execution of a contract is a period cost and should be allowed as a deduction from the current year's income. But ICDS 3, borrowing cost for execution of a contract, they form part of the cost of the contract, they have to be taken above the line. Just like purchases or direct expenses, they cannot be taken directly reduced from the profit and loss. Next is one poser, retention money of 7 lakh, earlier contract. Retention money of 7 lakh was, suppose for example, in 2018-19, I executed a contract, say of 87 lakhs, of which 7 lakh was retained as retention money. Going by ICDS, I had to offer 87 lakhs as my gross contract receipts, because ICDS makes it mandatory that retention money cannot be reduced, it has to be offered as part of the contract, gross contract rate. So 7 lakh becomes part of my gross contract receipts. Suppose I did not follow ICDS, income tax officer comes to know about it, and he makes an addition in 143 assessment that 7 lakh rupees retention money I do not allow you, and you have to pay tax on the 7 lakh rupees. So now you understand this. In my books, I have offered only 80 lakh rupees. Right? I have not recognized the 7 lakh rupees income. My assessment, 7 lakh rupees in addition. Right? So 7 lakh rupees is taxed. After the assessment is got over, this year in 22-23, I received a letter from the PWD that your retention money of 7 lakh rupees has been freezed. It is no longer payable to you because the contract you have executed has so many defects that the cost of removing those defects is going to be much more. So 7 lakh rupees retention money is free. It's no longer payable to you. It is finally seized. Now whether this 7 lakh can be claimed as deduction under 3617 is the question. Now 3617 is typically what? The basic condition of 3617 is that you have to write this amount off from your books account. Bad debts have to be written off. That is the basic condition of 3617. But along with these changes which we saw in different sections, you have 4 or 5 new sections, 43CB you have 43EE, you have 145B, you have 3618. All those new sections, new subsections, new clauses to the section. Along with this, there is a proviso to section 3617. And now 3617 allows this deduction even without writing it off from the books. So, the condition, the basic condition for allowing the bad debts, that the amount has to be written off from the books of account, is not applicable in such a case. That means there is no bad debt in your books of account. You did not write it off, but you have to offer this to the income because of the provisions of ITCS, and that has become bad now subsequently. Then the deduction of that amount will be allowed to you even without it actually written off from the books of account. That is provision in section 36(1)(7). I suppose this GSTR 1 and all that scenario we discussed, that this is an escalation claim. It is an escalation claim. This is one thing that we need to. The contractor has raised a bill of escalation of rupees 8 lakh rupees. As of 31st March, she raises a bill because there is an increase in the contract cost, and as per the terms of the contracts, commodity prices have substantially increased, is allowed the escalation. So he raises a bill of 8 lakh rupees as escalation. Because he has raised the bill and being a registered entity under GST, the 8 lakh rupees is also reflected in his GSTR return. The claim is well within the contract terms, and as for the past experience, this claim will be accepted. The contractor has reflected this same GSTR 1 and has paid GST on it accordingly. Now, whether this 8 lakh rupees will have to be recognized as income for the year in which I have raised the claim. The claim is not accepted on 31st March 2022, for example. The claim is raised. It may be accepted, might be accepted, or suppose it has been accepted in the next year, that is assessment, financial year 22-23, that is assessment 23-24, it has been accepted. So if you go by AS7, it typically is an income of the financial year 22-23. But going by the ICBS 3, when it talks of the reasonable certainty, it talks of a reasonable certainty about the more likely than not that it is likely to be received, or the circumstances, background, past history and the validity of the claim going by the contract terms, if it is receivable, then ICBS 3 requires you to recognize this income of 7 lakh rupees and offer. This is with regard to escalation claims. This we discussed. Borrowing cost we discussed, retention money. So I tried to cover all these issues in one example, and that is how we discussed. Now let's come to the revenue recognition, sale of goods, rendering of services, and interest, dividend, and royalties. Sale of goods, when to recognize, transfer of property or passing of significant risk and rewards. If they do not happen simultaneously, if the property is not passed, then at the time of passing off, or at the time of transfer of significant risks and rewards. Now this is important with respect to builder developer again. See, there is no ICBS 11 real estate transaction, not a law today, not prescribed, only published as a draft. So what does a builder developer do? Which ICBS applies to him? Now whatever ICBS and whatever parts of the ICBS that are applicable to him, accordingly he has to follow. Not one single isolated ICBS like ICBS 11. So now in this case, for example, if you have read guidance note of Institute of 2012 real estate transaction. Now this guidance note is combination of or considering the provisions of AS7 and AS9. AS7 is construction contracts, AS9 is revenue recognition. What Institute says in the guidance note is that till the time the flat or the property is booked, under construction the property is booked, till that time you are a seller, and thereafter, after the property is booked, you are a service provider, you are a contractor. Because on the day the property is booked, the flat is booked for 45 lakh rupees. Okay. So he wants the toilets to be here, these are the tiles I want, this is the color I want, these are the stages I want, otherwise everything is accepted. So thereafter, after the there is a registered agreement, thereafter you are going by the choices of the requirements of the person who is buying.